Okay, let's just picture it. The year is 2025, and the global economy is, well, it's a complete mess. Absolute turmoil. You're an investor trying to navigate this storm of uncertainty. And there's one question that's just screaming in your head. In a world this chaotic, where on earth do you put your money? That's what we're digging into today, this great asset race between an ancient legend and its flashy digital challenger.
Now, to really get a grip on the stakes here, you have to understand just how bad things got. We're not talking about a little dip in the market. No, 2025 was a full-blown crisis of conviction. I mean, everything that investors thought they knew, it was shaken right down to its foundations.
Conviction has vanished. I mean, wow, that's how a major financial publication summed up the entire mood. And that phrase, it just perfectly captures the fear that was gripping the market, especially in the crypto world. You see, this was supposed to be the year Bitcoin went fully mainstream, and instead, it just took a really sharp, really painful nosedive.
And the scale of this collapse, it was just staggering. Take a look at that number, negative $600 billion. That's not a typo. That's how much value just, poof, evaporated from Bitcoin's peak. The so-called digital gold plummeted over 26% from its high in October, completely wiping out all its gains for the year. It left a lot of people asking, is this it? Is the hype finally over?
But look, this wasn't just a crypto story. Not by a long shot. JP Morgan put it perfectly in their outlook. They called the whole year a complicated landscape. You had these huge, unpredictable policy changes with tariffs and immigration, and it basically turned the market into this treacherous, winding road with absolutely no map. You had no idea where the next turn was.
So, all of this chaos, it all boiled down to one single fundamental question for every single investor out there, big or small. In a world where nobody believes in anything anymore, and the rules keep changing, where do you actually put your money to keep it safe? And that very question, well, it kicked off a massive debate between two very, very different assets.
All right, so that brings us to the main event. Think of it like a heavyweight title fight, a head-to-head showdown. You've got the reigning champion versus the up-and-coming challenger, and they're both claiming to be the one safe place for your money in all this chaos.
So let's meet our fighters. In this corner, you've got the incumbent, gold. It's ancient, it's time-tested, the undisputed champion of storing value. It doesn't really care about business cycles, and it doesn't move with the stock market. And in the other corner, you have the challenger, Bitcoin, the new kid on the block, the so-called digital gold. It's decentralized, it's unregulated, and there's a hard cap on how much can ever exist. Now, both of them promise to be a safe haven, but man, they go about it in completely different ways.
Okay, so how do we cut through all the noise and the headlines? We need some hard evidence, right? And that's where this really interesting academic study from London University comes in. These researchers basically took both assets and put them through a financial stress test. They wanted to answer two simple but super important questions. Who's the better defender for your portfolio, and who's the better attacker?
So let's start with test number one, the fight for safety. The question is pretty simple. Which one of these does a better job of hedging against risk? In other words, if you add it to a regular stock portfolio, does it actually calm things down and protect you when the markets go crazy?
And when you look at the numbers, wow, the answer is just crystal clear. So let's say you just have an S&P 500 portfolio. Your risk level is sitting around 18.5%. Now you add some Bitcoin to the mix, and the risk barely moves. It drops to like 17.8%. But what happens when you add gold? It slashes the risk almost in half, bringing it all the way down to 10.15%. That's a massive difference.
So, the verdict on defense? It's an absolute knockout, no question. If you're looking to protect your money from big market swings, gold is the undisputed champion. But here's the thing, safety is only half the battle, right? What about actually making money?
All right, on to test number two, the race for returns. Who's the better attacker? To figure this out, we're going to use something called the Sharpe ratio. Don't worry, it's not that complicated. Just think of it like a grade. It tells you how much return you're getting for the amount of risk you're taking. Basically, it's the ultimate bang for your buck score.
And this is where the whole story just flips completely on its head. Gold was the clear winner on defense, right? But this chart shows that Bitcoin is, by far, the better attacker. Just look at those numbers. Bitcoin's Sharpe ratio is 4.83. Gold is way down at 2.55. That means Bitcoin is offering nearly double the bang for your buck.
So you're probably asking, why such a huge difference? Well, it all comes down to one word, volatility.
Because Bitcoin's price swings are so wild, investors demand a much bigger potential reward for being brave enough to hold it. That's what makes it such a powerful offensive weapon. So you have this clear picture. Gold defends and Bitcoin attacks. And that brings us right back to the big problem of the 2025 market.
Okay, so we've got the lab results, right? We know who's good at defense and who's good at offense. But how did all this theory actually play out in the real-world chaos of 2025? Who was the actual winner when everything was on the line?
So it's the obvious question, isn't it? Which one wins, gold or Bitcoin? We've got a clear defender, we've got a clear attacker. It seems like one of them has to be the winner, the single best choice in a crisis. But what actually happened in 2025 taught us a really fascinating and maybe unexpected lesson.
It turns out that's the wrong question. The whole lesson of that year wasn't about picking one over the other. Asking which one is better was completely missing the point. The real answer was something way smarter and way more powerful.
And here's the big reveal, and it comes straight from JP Morgan's analysis of that whole mess. The true winner of 2025 wasn't an asset at all. It was a strategy. They said it themselves. Diversification made a triumphant return. The people who did the best weren't the ones who bet everything on one champion. It was the ones who had a balanced portfolio. They were the ones who rode out the storm.
So here's the real takeaway. We've got to stop thinking of these two as rivals in a death match. They're not. They're specialists on the same team. Think of it like this. Gold is your shield. It's your defensive hedge that protects you. Bitcoin, that's your spear. It's your offensive weapon for going after those high returns. They have totally different jobs in your portfolio. And in a crazy, complicated world like we saw in 2025, a balanced team will beat a single hero every single time.
You know, this brings us right back to where we started. That Lund University study, they actually warned us about this years ago. They said that even though digital gold is a super catchy nickname, Bitcoin is just too volatile to act like real gold. It's an amazing, revolutionary new asset for sure, but it isn't digital gold. It's its own thing.
And so that leaves us with one last, pretty important question for you to think about. The big lesson from 2025 is that you need both the shield and the spear. So as we head into a future that looks even more uncertain, the question isn't which one should I pick? The real question is your portfolio built with just one champion, or have you built a diversified team that's ready for anything?